Now, what is one of the things we have to get? The written representations from management. That is our management rep letter. It is dated as of the date of the review report. In the management rep letter, which over here, what do we say? Management rep letter required. It is required. You have to get this or you cannot issue your review report, just like in an audit. You have to get it or you cannot issue your audit report. What's in it? That they fulfilled its responsibilities to prepare the statements such that they are fairly presented in accordance with the framework. They're responsible for DIM, design, implementation, and maintenance of internal control. Even though it's in the report, we mention it in the letter. They've given us all relevant information, so completeness. They've been complete and truthful in their responses to inquiries. They've disclosed anything about fraud that they know. They've disclosed information about non-compliance with rules and regulations. Believes the uncorrected misstatements are not material. They've disclosed any kind of threatened or pending litigation. They believe significant assumptions are reasonable. They've disclosed related party transactions, and there were no material subsequent events. So all of those are things that are included in the management rep letter. And we've talked about our management rep letter at the, I think it was in the audit section as well, in the audit report section. Communication with management. We need to communicate any fraud or any non-compliance with laws and regulations. At that point, you may want to consider seeking legal counsel or also withdrawing. Then, and again, those were all of what we talked about, the specific performance requirements. These are all the steps we did. Communication, understanding the industry, understanding the client, reviewing the procedures, doing analytical procedures inquiries, reading the statements, looking at the work of other accountants, looking at the relationships again, reviewing the evidence, getting your rep letter, and then drafting the report. So that's kind of the steps that we just went through. That's where we're up to. As far as the report, you have your standard report, which we looked at it a minute ago, right? Your standard report. Then it says you may modify the report for what? You may modify the report for comparative statements, emphasis of a matter, known departures, restrictions on the use of the report, statements prepared in a special purpose framework, going concern, subsequent event, work of other accountants, RSI, required supplementary information, or other supplementary. So those are all what is about to come up, the different types of examples of reports. So to not bore you to death, let's fly through a couple of them so we can start to see how they look. First one is comparative statements. It just means I did a review last year, I did a review this year. What do we do? X2 and X1 for the years then ended. The other paragraphs are pretty much the same. What if instead we have comparative, last year we did an audit and this year we did a review? Oh, we talked about that with a compilation, didn't we? Well, first, second, third, and fourth paragraphs are all what I'll call standard. No change, no change, no change, no change, just like that report we learned earlier. What do we have to add? This is our explanatory paragraph and other matter paragraph. It says, the statements for last year were audited by us and we gave an unmodified, unqualified, clean opinion on them. But we have, just like we did earlier, but we have not performed any auditing procedures since that date. So what we're saying is, yeah, last year we did an audit and we gave a clean opinion, but we haven't done anything since then. Just like earlier when we did a compilation, we said, oh, last year I did a review and we were not aware of any material modifications and we haven't done any review procedures since then. Same concept. Emphasis of a matter and other matter. So an emphasis of a matter is when you want to draw attention to something that has been properly accounted for and properly disclosed. So you're drawing attention to something that is properly accounted for, properly disclosed in the accountant's judgment. An emphasis of a matter immediately follows the conclusion, could have a heading, emphasis of a matter, or a suitable title. So that title could either say emphasis of a matter or known departure, for example, from principles. So you can call it what you want in that regard. Include a clear reference to where the matter is described. So maybe you're, as described in footnote whatever. And specify that the accountant's conclusion is not modified. In other matter paragraph is appropriate when the accountant considers it necessary to communicate a matter that is not required to be presented or disclosed in the financial statements. So stuff that's required to be disclosed, that's the stuff, emphasis of matter. Other matter is stuff that you don't have to disclose it, but you choose to do so. In other matter paragraph, we presented immediately after the emphasis of a matter. So the order would be, you've got your basic report where you have your intro, management's responsibility, accountant's responsibility, accountant's conclusion, emphasis of a matter, and then an other matter. So if you needed that many paragraphs, you could have it. Some examples, financial statements prepared in accordance with a special purpose framework, so like OCBOA. A change in the reference to a departure from an applicable, a departure from an applicable framework. Prior periods, comparative, we just looked at. A departure from the framework. Modification to prior year's opinions. Supplementary information. Applicable reporting framework of required supplementary information. So these are all examples when you could add another one.